Hey guys, how's it going? It's Andy from MagooInvesting. Happy Wednesday. So far this week has been very interesting. Monday we had an incredible recovery with the stock market jumping 4 to 5%, depending on which stocks or indexes you looked at. And then today, on Tuesday, the stock market fell another 1,000 points for the Dow Jones, which this has been a lot of 1,000-point drops. And so we've had a very volatile time. And in today's video, I'm going to be discussing some places that I would look at for people that are getting very worried about the stock market potentially crashing. So in today's video, I'm going to break down some areas that I would avoid getting into as the volatility increases, and then I'm going to talk about a couple sectors and types of stocks I would look at if you do think that the market is going to crash. Before we get started, I got to say that I'm not a licensed financial advisor, and I highly recommend talking to a professional, someone that can find you the best place to put your money going forward. In addition, I really appreciate if you hit that like and subscribe button, as would help my channel out a lot. Based off the fact that the last recession, 2007, is also called the financial crisis, I feel like a lot of people would kind of assume that I would be advising against going into the financial sector for the upcoming months if you think the market's going to crash. And that's not really the case. In 2007, there was a lot of problems that were caused by financial banks and financial investment firms. And as a result, we had some poor mortgages, we had the financial crisis, and the stock market fell a lot. However, since then, there have been a lot of government regulations that have gone in to make sure that this doesn't happen again. Based off of those regulations, I assume that this is not going to happen again. So for people that were talking on, when I talked about NRZ, which was a real estate company, talking about, oh, if the market falls, it's going to get hit. I think from the lessons that we learned from the financial crisis of 2007, I don't think we're going to be seeing a very similar recession. If we do see it, it will be because of the world economy and not exclusively because of interest rates and mortgage problems. However, I don't think that financial sector is probably the best way to go. I don't think it's going to be the worst. I think it'll be smack dab in the middle. It's not one of my favorite sectors, but I thought I'd just kind of point this out at the beginning of the video, saying that just because one sector caused the recession the last time, I don't think it'll happen because of it again. Probably the broadest idea that I would look at for companies to stay away from if you do think that the market's going to crash are stocks that are still recovering or are relatively new. On this channel, I've talked a lot about my experiences trading Macy's, ticker symbol M. Macy's is a company that has been hurt really bad in the past couple years. Retail stocks and specifically department stores have had a really tough time kind of transitioning into this online dominated commerce area. At the end of last year, I identified Macy's as being a potential trade. It had kind of stabilized around the $14 mark. It started pushing up and things started looking very good. However, these are the types of companies that I would highly recommend staying away from if you think that the market's going to crash. For these companies to restructure, they're going to go through some rough times. And if there's rough times in the overall economy, it's just going to continue to push it lower. The way that my trading strategy works is I look for companies that are undervalued, have had rough times because of poor earnings or bad news, and things that I think can recover in the future. The problem with a recession is that everything's getting pulled down. And so it's hard to find a company that you think will recover when everything's just getting pulled down. During times when the economy is good, you're looking for companies that will outperform the market. And during times of high volatility, stuff like Macy's, Gamestop, companies that have been having a very rough time recently are going to be probably the first places that are going to suffer. In addition, new companies are an area that I would highly recommend staying away from. The previous recession before 2007 came from the dot-com bubble, which burst at the beginning of the 2000s. And during this time, it gave a great representation of the importance of having positive cash flow for companies when the economy goes south. During that time, you had a lot of venture capital firms putting a lot of money into these brand new, unproven companies. And as the economy started to crash, they pulled their money out of it. And as these tech companies, which they're mainly tech companies at this point, did not have enough financial backing to survive this time of turmoil in the market. And so for the people that have been kind of vocal against me, saying for companies like Uber, how I don't like their business model because they're just burning through cash, and they're like, oh no, you don't have to worry about that. They have enough backing. If the stock market does fall and we go into a recession, venture capital is one of the first things to pull out of the market because as risk increases, they're in very risky markets. When you're putting venture capital onto these unproven companies, that is a very risky place to be. And so as a result, I would highly recommend staying away from companies that are still burning through cash or are still relatively new. During times of economic turmoil, the things you're looking for are companies that have a track record of being profitable and being very stable. And so that transfers into my next area I would look at, which are blue chip stocks. In my opinion, blue chip stocks are probably the best place to put your money if you think that the market's going to crash. Blue chip stocks are some of the largest and most well-established companies out on the market, and often they pay a pretty steady dividend. These are companies that pretty much everyone has heard of. Stuff like Amazon, Microsoft, Walmart, Visa. companies that have been around for a long time and they are kind of staples of whatever sector that they're in. This idea goes along with the idea that I recommended that you stay away from companies that are struggling. And so picking blue chip stocks, you're picking the leaders mainly in that sector. These are companies that have been around for a long time. They have great financial records, and having a recession probably won't affect them that much for the long term. In the past, blue chip stocks are considered a safe haven from recessions because for people that are very worried about the overall market, they tend to go towards companies that they have a emotional affinity towards. And stuff like Amazon, Microsoft, and Apple are all companies that people use on a regular basis and can feel very comfortable putting their money in even when the market is in a very heavy turmoil period. The final point for why I would recommend looking at blue chip stocks is in the past with recessions, some of the first companies to rebound after the recession starts to slow down have been the blue chip stocks. These are companies that people feel very comfortable putting their money into, and as a result, they're usually one of the first ones to rebound. So we're very far away from that at this point, but for people that are kind of worried about a potential market crash, I think blue chip stocks are a great thing to research right now. The next sector I'd recommend looking at is the defense sector. And it doesn't really matter who you talk to, what side of the political spectrum they're on, how young, how old they are. I think everyone can agree that the United States spends a lot of money on defense. Defense stocks are considered a safe place to be during a recession, mainly because most of the deals that get done between the US military and these companies are contracts that last for a decent amount of time. From my research for this video, I found that the average recession is around 14 to 15 months, which really isn't that long. And so for companies that are signing these contracts with the US government, it gives them a lot of stability during this economic turmoil. And having stability when everything else is being very volatile is a very attractive place to be. My two favorite companies in the defense sector right now are Boeing and Lockheed Martin, ticker symbol LMT. I've talked a lot about Boeing on this channel already, but I've mainly been looking at it in the sense of being a commercial plane. And Boeing has a large presence in the defense industry. Just from Q4 of last year, they had $6 billion in revenue from defense and space products. And so they're not only involved with commercial flights, they do a lot of stuff with defense. And the fact that they are a blue chip stock, the fact that they are a defense company and they've been hit by bad news and they're relatively stable in the same way, they kind of check all of the boxes for companies that I would consider taking a position in. When I think of defense stocks, I always think of Lockheed Martin. They're one of the most well-known companies out there, and they're also could be considered a blue chip stock when you look at how well established they are. And I think that both Boeing and Lockheed Martin would probably be some of my favorite places to park my money if I did think that the market was going to crash in the upcoming months. Finally, after doing research for this video, a lot of places that articles referred to as being a safe haven during a financial crisis was healthcare. And interestingly, if this is a recession that is brought about by the slowing of the world economy, it'll be very interesting to see how the healthcare sector reacts to this. As everyone I'm sure is pretty aware that coronavirus has kind of sparked a lot of global problems. You have the economy being pretty much shut down in China, and now other countries are starting to get worried that now we have cases in the United States and a lot of different other countries. And for people to say in the past that healthcare is a relatively safe place to put your money during a recession, it's really interesting because last week, healthcare stocks had one of their worst weeks ever. Most of the ETFs that I saw for healthcare were down 15%. This is not a sector that I would recommend taking a position in right now, but I think it's going to be really interesting to see how coronavirus is affecting these healthcare companies' bottom lines. For companies that do a lot of stuff with health insurance, I can imagine that they're going to take a hit. But for companies that do a lot with pharmaceuticals, biotech, and run hospitals, I don't think it'll affect them that much. So it might be a safe place if coronavirus starts to slow down, but the slowing of the world economy also happens. Compared to the blue chip stocks and the defense stocks, I don't think healthcare is the best option out there, but it was just something that I thought I'd bring up because a lot of the articles that I looked at while doing research for this video mentioned healthcare as being a great place to be. And it's really interesting because the dot-com bubble and the financial crisis had nothing to do with a health-related scare. And now we're getting coronavirus as being kind of the catalyst that's bringing the slowing of the world economy back into the discussion. And so it'll be very interesting to see how these healthcare stocks react to the fact that coronavirus is going around and the fact that it could cause the beginning of a recession. I don't think that's going to be the case, but with how much it's being talked about, how everyone seems to be freaking out online, I think it'll be very interesting once the next quarter of earnings come out for these healthcare companies. So let me know what you think about coronavirus, the slowing of the world economy. Today we had the Federal Reserve cutting interest rates, which is a very interesting move, and I've been trying to read as much as I can on the topic so I can be as informed as possible. So let me know what you think about that. Let me know what you thought about my recommendations for where to go if you think the market's going to crash, and let me know how you feel about the potential of the market crashing. Do you think everything's going to be fine? Do you think this is kind of the media hyping up coronavirus to be more than it actually is? Let me know in the comment section down below. Thanks for watching this video. Hope you guys have a fantastic week during this very volatile month so far of stocks, and I hope you have a fantastic day. Thanks for watching.